Hey guys, this is Aiman and today I'm going to be talking about how to hold into a trend and 3 important things you need to know before you get into a trend, or basically before you start practicing trend trades. Before I do that, please make sure to like, share and subscribe to our channel, and I would really appreciate if you put a comment after this video. If you are having any questions, just feel free to ask, or just give me your honest opinion about what you think about my videos, if you want me to keep doing them, or if you have any ideas you want me to make a video about. It just keeps me motivated to do more when I see that people are actually interested in watching those recaps and those videos. Anyway, let's start. So this was today's trade I've taken on TLRY, but before I go into the trade, I want you to know when you can hold into a trend. Think of it this way: how many times you were getting into a trade, looking at the 1-minute chart or the 5-minute chart, seeing the candles form, pull back, and then you get this feeling sometimes that, okay, like right now the stock looks like it's going to break out. Right now it looks like it wants to rip higher and break up. You take it to the long side, it does go a little bit in your favor, and what happens after that is just a dump. So you were right, I mean, it did break out, but unfortunately this breakout which happened around here, it was not enough to give you enough risk to reward, whether this was on the 5-minute chart, whether it was on the 1-minute chart, unless you are a scalper. But you get this feeling where you know that right now it is going to break, and it does that. The time frame though was wrong, right? It was not enough to make that move. Now, I want you to practice to get this feeling, but not on the 1-minute chart and not on the 5-minute chart. You want to get the exact same feeling on the 60-minute chart and the daily chart, and that's the trend trade. Because right now, today, you could see we dropped. Do I know how we're going to close tomorrow or how the next candle is going to be? It could simply engulf it to the opposite direction. It could start trending to the upside. It could even gap up. It could gap down. I literally have no idea where the next candle is going to go. But today's candle, I felt that it is going to break down. Not 100%, but I had that strong feeling that most probably it's going to do that today. Looking at the daily chart, you could see that we dropped down, we had sort of a descending triangle or sort of a reverse ABCD pattern, and today we're opening below the previous day close. Looking at this, I feel that today's candle is going to be red. Now, if you feel that today's candle is going to be red, it means that you can get approximately how much? This is the next thing. The first thing, you need to get that strong feeling where this candle is going to go. Next thing, you want to check the average to range, and I see that this stock approximately makes a move of $1.60, $1.70 intraday. That's the average to range. So if I get into this thing to the short side, for example, I know that I can get at least $1.70 or $1.50 move. How do you calculate the average to range or check the average to range? Basically, it's the whole move from market close the previous day till today's basically low, because we are taking it to the short side. And you can see that we made a move from 21.30 to 19.60. How much is that? That's around $1.70, which is basically the average to range. Now this tells you how long you can hold into a trend. If we make that $1.70 move at the open, I'll just exit most of my position and I'm not going to be holding it for a trend. I'll be looking for a reversal or something like that. So the next important second thing you need to know is how much the stock can move intraday. If you are getting in somewhere in the middle to the short side, you know that the stock already did a move of $1.30. It means that you basically have somewhere around 40 cents left and you can't hold into a trend. You could just simply take it to the short side, put your stop loss, get your 2 to 1, get your 3 to 1, whatever you aim for, and get out of the trade. If you get in earlier on the day, you know that you can hold on for $1.70 move. Finally, and that is the most important thing, you need to keep your average low. So I took this thing to the short side, in this case high. So I took it to the short side, unfortunately tightened my stop loss, and I got stopped out exactly to the penny. I immediately re-entered, I put my stop loss, and now I'm down. I'm taking it to the short side, it's pulling back, I'm taking a partial. Now again, it's pulling back, and look at this, that is my average. This is my average. And I have this support ahead of me, and I have this support ahead of me. So the stock, to get to my average, needs to break 2 resistance levels. Why do I need my average to be around here? There is literally no need and it is so high, I can add to my position and move my average somewhere around here at least. In case it breaks this level and it goes a little bit above it, I could survive it and go lower. So I need to keep my average high. I can't add here and put my stop loss around here because it could just simply wick me out, get me stopped out, and then drop down. Now look at this. What's happening after that? It's pulling back, it's dropping down, pulling back, and see, I didn't add around here. Why didn't I add around here? It's because of the third most important thing. You need to keep your average high so that you survive the pullbacks. If you take a look at the 1 minute chart of this in this chart, you can see that somewhere around 1055, somewhere around 1055, at the low of the day, you're having increasing volume. This increasing volume means exhaustion. It's an exhaustion volume, and this volume around here means that we could reverse or we could pull back. Anyway, whether it's reversal, whether it's pullback, I know that we could make a huge move to the opposite direction of the trend. That's why I don't want to add around here, because I could simply get stopped out on a huge pullback, maybe to view up, maybe above it. So I decided to keep my average high, let it be there. I know I will miss an ad, and I could miss a decent move, partials with an ad, but at least I'll still be in the trade. Now that I see we're actually working and we're holding this double top around here, I could add to my position and move my stop loss not to exactly up here. I'll move it to the previous resistance so that I have some room. In case it breaks one resistance level, there will be another resistance level ahead of me. Now look at this again. It's pulling back, dropping down. Instead of adding here and moving my average up until here, I'll move it to the next resistance level. I want at least to have two levels which will protect me if the stock goes against me. Now we're working, I'm taking a partial. My final partial was 1955 target around here. 2 cents didn't get into it, and basically I get stopped out. Now, 3 important things. You need to get the feeling of the daily chart where we are going to go. If the daily looks like this, I'm not holding for trends. I'm basically scalping it. I'm playing a quick 2 to 1, 3 to 1, quick reversal, small reversal, quick small uptrend. Basically, I'm not holding it to trend. If I see that we are clearly looking on the daily chart, I will check the average to range, and finally, I will keep my average high and try to hold or manage the trade as long as I can before it gets me out, so that I can get the most profit out of it. And in this case, it lasted the whole day. So that's it, guys. Thank you for sticking around. Again, I'd appreciate a comment, subscription to our channel. If you want to get notified to our channel, click that bell button. Oh my god, this is the ugliest bell ever. Anyway, and I'll talk to you tomorrow in the chat room. Bye bye.